In the early morning silence of Wall Street, screens flicker red as traders stare at a number they once thought impossible, the falling value of the US dollar. This is not just another market dip. It is a story of power, trust, fear, and a currency that shaped the modern world. The dollar once stood unchallenged, a symbol of American strength after World War II, and the backbone of global trade. In 1944, leaders gathered at Bretton Woods and crowned the dollar as the world's reserve currency, linking it to gold and to hope. For decades, the system worked, building prosperity, funding innovation, and lifting millions into the middle class. Then in 1971, President Richard Nixon ended the gold standard, opening a new era of debt, printing, and financial engineering. The change unlocked growth, but it also planted the seeds of long-term weakness. Through the 1980s and 1990s, America borrowed, spent, and expanded, while the dollar remained dominant. Tech giants like Microsoft, Apple, and later Google and Amazon grew under a system fueled by easy money. The world trusted the dollar because it trusted the United States. That trust was tested in 2008, when the global financial crisis erupted from the collapse of Lehman Brothers. Trillions of dollars were created to rescue banks and stabilize markets. The emergency measures saved the system, but they also inflated asset bubbles and widened inequality. In the years that followed, interest rates stayed near zero, encouraging more debt across governments, companies, and households. By 2020, total U.S. debt had crossed $30 trillion, a number once considered unthinkable. Then the pandemic struck, shutting down economies and forcing even more massive stimulus. The Federal Reserve unleashed unprecedented money printing to prevent total collapse. For a moment, it worked. Markets soared, and optimism returned. But inflation soon followed, eroding purchasing power and confidence. In 2022, prices surged at the fastest pace in 4 decades, shaking families and businesses alike. The Fed raised interest rates aggressively, trying to restore balance. Higher rates strengthened the dollar briefly, but they also slowed growth and stressed the global markets. By 2024, cracks were visible. As banks faced pressure, real estate weakened, and consumer debt climbed. Foreign governments began to question their heavy reliance on the dollar. China and Russia accelerated trade in their own currencies. The BRICS nations explored alternatives to reduce dollar dependence. Central banks increased their gold reserves, preparing for uncertainty. Oil producers discussed pricing energy outside the dollar system. Each move chipped away at the foundation of dollar dominance. In Washington, political gridlock deepened, delaying budgets and raising the risk of default. Credit rating agencies issued warnings, reminding the world that even America has limits. Investors started demanding higher yields to hold U.S. debt. Higher yields meant higher costs, tightening the financial noose. The cycle of borrowing, printing, and inflation grew harder to control. Ordinary Americans felt the strain as food, rent, and healthcare costs climbed. Savings lost value, while wages struggled to keep up. Retirees worried about fixed incomes in an unstable currency. Young families postponed dreams of home ownership. Small businesses fought shrinking margins and rising expenses. Meanwhile, global markets watched nervously, knowing that a falling dollar affects everyone. Emerging economies faced volatile capital flows and currency shocks. Commodity prices swung wildly, disrupting supply chains. International trade grew more uncertain and more expensive. History offered warnings, from the fall of the British pound after World War II to the collapse of reserve currencies before it. No currency rules forever, and dominance always carries a price. As confidence weakens, people search for safe havens. Gold regains appeal as a timeless store of value. Bitcoin and digital assets attract believers seeking independence from central banks. Real assets like land and infrastructure gain renewed interest. Diversification becomes a survival strategy, not just a financial choice. Governments quietly prepare for a world with multiple reserve currencies. Corporations hedge against currency risk and global operations. Investors rethink portfolios built on decades of dollar stability. Every decision now carries higher stakes. The question is not whether the dollar will face pressure, but how far it can fall. A complete collapse would reshape geopolitics, trade, and everyday life. Imports would become expensive, shrinking consumer choice. Inflation could surge, testing social stability. Interest rates might rise to painful levels, slowing growth. America's ability to project power through finance would weaken, yet resilience remains part of the national story. Innovation, productivity, and reform could restore strength. Fiscal discipline and long-term planning could rebuild trust. Transparent governance could attract global capital again. History shows that recovery is possible when lessons are learned. The lesson is simple. Debt without limits leads to fragile prosperity. Money printing without discipline erodes confidence. Short-term gains often hide long-term costs. Financial security depends on balance, patience, and accountability. For individuals, living within means is the first defense. Building emergency savings creates breathing room. Investing across assets reduces single-point risk. Learning basic financial literacy empowers smarter decisions. Staying informed protects against panic-driven choices. For leaders, courage to make hard reforms matters more than easy promises. Honest communication strengthens public trust. Sustainable growth beats artificial stimulus. Strong institutions anchor economic stability. The dollar's journey is still unfolding, and its final chapter is unwritten. What happens next will depend on choices made today. Each policy, each vote, and each investment shapes the outcome. The world stands at a financial crossroads. Fear and opportunity walk side by side in this moment. Those who prepare may not only survive, but thrive. Those who ignore the warning signs may face harsh realities. The fall of a currency is never just about numbers. It is about lives, dreams, and the future of generations. In every crisis lies a chance to rebuild stronger foundations. In every collapse lies a call for wiser stewardship. The story of the dollar is ultimately the story of human choices. The coming years will reveal whether discipline or denial will prevail. Markets will judge actions, not words. History will record who prepared and who hesitated. And ordinary people will live with the consequences of every decision. When the world's most powerful currency reaches its breaking point, will we be ready to change before it changes us?